Hello, this is Ernest Osias, Director of Market Analytics with Woodall Risk Management. Thank you for joining us for our weekly technical overview of the grain markets. Before we begin, a brief moment to look at our market disclosure. This is a solicitation, and there is substantial risk of loss in trading futures and futures options. Past performance is not necessarily indicative of future results. Thanks once again for joining us for our weekly installment of the Technical Market Overview. We'll go ahead and begin. After having made its highs near the Memorial Weekend at the end of May, corn has been dropping precipitously through the middle of July, and we're finally finding a little bit of legs as the market over the last couple of days have found a bit of a bounce. Wednesday in particular shows a pretty big outside reversal day, and the market is trading very close to the top end of its trading range. Right now we have resistance up against our 1x1 angle, and the ability for this contract to actually close above that 1x1 angle this week could lead to continued gains to follow through into next week. We have our next time factor landing about in the middle of next week. One of the key levels that did come to fruition was our 360-degree mark sitting at 342 3/4. Upon reaching this area, the market finally found some support and we're seeing a little bit of legs. One of the major concerns that we did have is that the market was potentially forming a continuation pattern to the downside. In the event that this market was not able to hold this 342 number, we're looking at a potential drop that could very well go down to test the 90-degree mark. And essentially what we'd be looking for is a move similar to the leg that coming into the continuation pattern would materialize on the other side. As long as this market's able to continue higher through the rest of this week, we anticipate that resistance overhead near 356 to 360 could very well be the next zone that this market finds some good resistance. The December contract's moving in a similar fashion, and for it, what we find is that the market came in at the 2x1 angle to find its support in conjunction with 3 standard deviations below its point of control. Overhead, we have its 1x1 angle, and this would be a very key area for the market then to find support if it's able to get above this level. Upon being able to cross through, we have our next point of control number sitting at 371 3/4. Once this market's able to cross this area, then our next key resistance would live near 380, and all along we've been looking for 380 to be a potential key area for the December corn contract to find some significant weakness. As you can see, the last time it was trading near this area, we had some very big sellers coming in, and we anticipate something of the like could very well occur down the road. For the December contract, its support came in right at the 360-degree mark at 350 3/4, and as you can see very nicely, this is where the market did make its reversal. We did have a time factor for the December contract on July 17th, and what we're noticing is that the market did consolidate a bit coming into this time factor, and we see a very nice explosion a couple days later. Continued follow through is going to be the key for the December contract or for the corn complex. So for the balance of this week and into next week, it's going to be very key to see if the market is able to make it up through its next key levels. As far as soybean is concerned, we had applied several cycles to determine whether or not this market had a very good chance of finding potential support. And over the last couple of days, its move up had been fairly weak, but despite the weak movement to the upside, after having reviewed 5 correlating cycles, 4 out of those 5 cycles did make contract lows in July. The one holdout made its low in September, and given our probabilities, our disposition was that this market could very well make a very good low sometime this week. The market continues to creep up a bit, but we would like to see the market continue finding some legs. And for the September contract, it's right up against its point of control level at 850.25. If this market's able to close above this number this week and continue higher through next week, we do like the possibilities of this contract trying to make a run up to about 900. The November contract found its legs near the 270-degree mark of 845 3/4. Despite having traded through this level a couple of times, it actually only closed below that number once and then returned right back above. This is where we see this consolidation of sideways movement, and the market continues to trade just slightly above right now our sinusoidal natural wave. This week, we would like to see the market reach 874 and potentially its point of control level of 879 1/4. Upon reaching these areas, this is where we think potential resistance could live, But if the market's able to get through these numbers, we do believe that the November contract could very well make a run up to about 904. We've previously had 829 as a key level for this contract, and as you can see, this is where this snapback reversal did occur, and again the market started to make its way up from there. The next point of resistance based off of this chart appears to be somewhere in the neighborhood of 875, which is again close to its point of control number of 979.25. Upon getting through this number, this is where this market could very well make its next run. And so again, the next key level that we're going to be looking at is 879.25 to 875. The movement for the week contract is essentially uneventful. After having made its low just below the 360-degree mark of 479, the market continues to find very good support right at about 483. The market now has been churning up against this support level, and we anticipate that this market could very well remain inside of this trading range of 479 to 512. If the market's able to break above the 512, 513 area, then we can see a potential next leg up, but for the upcoming weeks, we do anticipate continued sideways movement for the week contract. 513 is going to be a very important level, then followed by 524. Its ability to get above 524 would signal very good strength, but we're looking for continued sideways action for about a month, from which point the market will eventually make a significant low, and once that occurs, we're looking for a very strong move to the upside with wheat. In addition to having found support at the 360-degree mark, we do find volatility-based support as part of the reason why this market has been inside of a consolidation, as well as we have our sinusoidal wave also acting as very good support for this contract. Our volatility bands have been dropping, suggesting that the market could find near-term resistance overhead. And as the volatility bands continue to collapse upon one another, once they get too close to one another, we'll often see a very nice explosion on either side for the markets as they touch. Once our volatility bands have met full compression, we look for a nice explosion outside of those compression bands and for a new trend to begin for wheat. Our action for the US dollar remains unchanged, finding very good resistance near 95.83, which is our 360-degree mark. The market has essentially been consolidating for several weeks with resistance just above 95 and finding very good support at the 180-degree mark at 93.88. We believe that continued consolidation near 93.42 and 95.86 will continue for some time, and once this market's able to break outside of either one of these key areas is where we would see some continued action for the dollar. The weekly chart shows us much of the same, and as we can see here, the volatility-based resistance band continues to be consistent for this leg up that we're looking at. There is the possibility that the market could very well make a correction. As long as he stays near the $92 mark, we think a nice leg to the upside would then continue. Upon breaking 92, a retest of previous lows is then possible, where the market could very well come down to somewhere in the neighborhood of 89. Thank you so much for joining us for our regular market update. Look forward to touching base with you again next time.